Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Chris Fisher of Click Ventures. Chris, thank you for joining us.
Oh, thank you very much for having me on.
Great. Can you tell us a little bit about your background before you started investing in early stage?
Well, I've been doing early stage a long time, but I kind of came through to it roundabout way. I studied physics. I did some IT programming, this kind of thing in my early career. Came up through a corporate background. Ended up finding myself running a small corporate venture capital program back in the 90s. After that, that company sold to a larger company based in Hong Kong, which brought me from the US to Hong Kong, where I was CIO for a large industrial products group and also heading up a lot of their M&A activities, acquiring companies all over the world and using IT to kind of glue them together. That was very interesting. It brought me a lot of travel and also put me in contact with some interesting entrepreneurs around the world. And on my travels, I got involved in angel investing, which through business school, I kind of came to the conclusion that that's a very interesting place to be. And it was a way for me to exercise my interest in venture and my interest in working with entrepreneurs, kind of to basically get exposure to this kind of innovation and this kind of economic value creation. So through that, in the corporate job, I was, in the meantime, kind of meeting interesting people and building networks all over the world. In about 2014, I left the corporate life to focus on impact investing fund, or actually an impact investing group that we had set up to try to find deals that have an interesting social or environmental impact, positive impact, while generating at least market level returns in the early stage. So we were looking at venture, but it was focused on highly scalable kind of technologies that would improve people's lives in some kind of measurable way. Through that, I started doing more and more angel investing in Hong Kong, where I'm based. And it was really at the beginning of explosion of creativity in Hong Kong. A lot more entrepreneurs started coming to Hong Kong, and there was a lot more deal flow. Some of the deals I got involved with actually took me to my current partner at Click Ventures, and we ended up kind of investing in some of the same deals. I've known Carmen Chan, founder of Click Ventures, for many years, and working together with some deals, I came to the conclusion that, well, it was a little early on the impact side in Hong Kong. While there was some deal flow, it was not sufficient to really make a full-time thing out of it. And so Carmen was growing very nicely. It has a great deal flow, and Click was really getting a lot of traction throughout the world, actually investing globally. So it was a really good fit. Carmen wanted some help. And so about a year and a half ago, I joined Carmen full time to help her with Fund 3 at Click Ventures. And yeah, I've been with her ever since. That's kind of, I guess, how I came to venture.
Well, it looks like Click Ventures focuses on startups using network effects, among other things. Can you tell us why you chose that particular investment approach and the benefits of network effects?
Okay, so through that progression, I've invested in as an angel, I've invested in various areas. Things like hardware, things like energy, things like advertising technology. And through that process with my own capital, I came to the conclusion that some things are very hard and some things are really, they're certainly not easy, but much more likely to succeed. And so for a lot of different reasons. And the types of businesses that I've settled on and what the Click is very focused on are these kind of relatively asset-light companies that are either internet or mobile, and take advantage of the highly scalable nature of these networks and can build very strong barriers based upon network effect. So network effects is essentially very simple. It's the more people that you lure onto your platform or the more people that you're selling to, the more customers you have, the better the product becomes, and therefore the easier it is to attract and retain new customers. And so you get this flywheel effect, which is much talked about. And it really is very powerful in terms of lowering customer acquisition costs, making a winner take all type of market, where if you've invested and you grow aggressively in the early stages, you can quickly globalize with relatively less assets than you would have, say, 10 years ago or so before marketplaces and platforms came into existence. So the network effect is critical. We look for it in every deal we do, in some way building a moat based upon some kind of network effect.
So for the investors out there, what's your advice for those investing in startups using network effects? What would you tell them to look for when they're trying to do what you're doing?
Well, we focus, first of all, on Series A. So we're a little bit later. If you're looking at seed, it's a little different. But by the time we get involved, there's definitely some kind of traction happening. We're very quantitatively focused in terms of looking at the numbers and the data, and what does the data tell us? What kind of digital assets are accumulated through this model? And how can we drive this model forward faster? How can we iterate faster? How can we use the data that's being generated to make better decisions, to do kind of A/B testing, to figure out which channels work the best and emphasize our resources into those channels, things like that. So due to that's kind of that's our main model, how we help the startups to scale faster. So with that kind of suggests, when we're evaluating deals, we're kind of looking at those metrics, looking at the team, looking at how data rational they are, how quantitative they are, how able they are to utilize what's coming out of their business model to make better decisions, drive things faster, scale faster, globalize faster, that kind of thing.
Great. Well, it's been around for a while, and it seems like the industry is evolving in this space with network effects. Where do you see it going? Where do you see the direction of network effects? Are they getting more complicated, more simple? They just go into new markets? Where do you think it's happening?
Well, I think the network effect is definitely becoming more and more important, especially when you factor in things like blockchain. But on the other side, I think there's going to be quite a bit of backlash from a regulatory standpoint, and some of these concerns about data exhaust and who owns data and things like that. So I really expect to be a lot more scrutiny on this. I hope there's actually more intelligent conversation about how to properly make this happen, so that at least it's clear what startups can and cannot do, what should and should not be done. So I'm looking forward to some of what's happening at Facebook and things like this to hopefully move the conversation forward and make it easier to operate in these environments. I think privacy is an opportunity and a challenge, and needs to be considered very carefully going forward. I think that will happen. Time frame, I'm not sure, but I think it's probably in the next 3 or 4 years that we'll start to see some significant progress in clarifying these kind of things.
So, but what's the specific criteria? We have a lot of startups that listen, and they're always trying to figure out, am I a good fit, and how much revenue do I have to have before I'm in your purview there?
So in terms of revenue, it can certainly be pre-revenue. We look for a nonlinear trend to be there. It can be users, it can be user adoption, it can be page views, it can be a lot of different metrics that we're willing to look at and consider. But we're really looking for the kind of traction that's exhibited immediately after product market fit is achieved. So we like our capital to come in to help to scale rapidly on something that's already starting to work. So that can have revenue. There's certainly cases where things have revenue when we've invested, but there's also many cases where they're pre-revenue. In terms of examples of things, so there are lots of things with network effects nowadays. We're willing to do big stuff and small stuff. We were involved in it later on in something like Spotify, we're in things like Palantir, but we're also more recently in Fund 3, where we're more focused on the A stage. We've done things that are platforms, marketplaces, this kind of thing that have network effect.
And do you have any specific portfolio examples that really highlight the thesis itself? One or two that you think are really good examples?
On a small scale, for example, We're in a company in New York City that's essentially a platform for people who have very high-end photography equipment, where it's essentially a sharing economy type of play for people that the lenses and the equipment is very, very expensive. And so if someone's on a site to produce a TV show or a film or a movie of some kind, they can, on demand, request very specific equipment and share it. And the platform takes care of the insurance and the logistics and transportation, checking things in, checking things out, damage assessment, all that kind of things to make it a smooth, seamless experience for the actual renter. They also work with rental shops as well as individuals to do something in this very specific niche. But it has a very nice network effect because participants are all around a very specific interest area, and the more people who are listing their equipment on the platform, actually, the more people who will come there to rent. And so you can establish this kind of dominant marketplace type of approach. And then now they're geographically expanding from New York to LA and to other cities where there's a film industry presence.
So what are the challenges in investing in network effects? Of course, you have to get the network effect going, and that's a challenge. But beyond that, what do you see as the major issues startups face in making these businesses work?
That, I guess, comes in two dimensions. One, for the startup, there's a lot of challenges because it's chicken egg situations, quite frankly. Usually they need more people to list whatever product or service, and they also need more people to buy. And those two things are related in a way that's difficult to get started. But once it gets started, it goes viral and the customer acquisition cost is very low. From our perspective, actually investing in network effect is just getting into the really good deals, because by the time they're starting to generate that nonlinear curve, then a lot of people would like to invest in them. And we cooperate a lot with other venture firms, and that's how we source a lot of our deals is working with other well-established venture firms. And we're happy to share allocation in rounds for sure, but getting access to the really good ones is sometimes an issue. We've been pretty successful in that Carmen and I try to maintain a very high profile. We speak at a lot of conferences. We try to add a lot of value in any kind of co-investing relationships. We've established some capabilities around data science and around the kind of skills that drive network effect. So we look to try to add that kind of value into our investing relationship with the portfolio company, and also for the other investors to help out in that way. That's the way we've tried to work around that. But essentially, something is just blowing up and it's doing really, really well, and it's scaling like crazy. There's plenty of private capital available in the world that would like to flood into that deal.
Sure. So there are many sectors out there, subsectors and applications where network effects could be applied. If you had to pick a couple of them as good immediate opportunities to pursue, what would you call out as ripe opportunities for network effect applications?
Well, in a very broad area, I think blockchain is creating opportunity, because blockchain is essentially about network effect. The value of a token is very much into the network value. And so you look at any area where blockchain is likely and expected to disrupt, these areas are all going to be very interesting, I think, in the future. So that could be fintech, that could be supply chain, that could be where you're keeping track of things, where there's a trustless situation, where there's a complex set of participants that don't trust each other. In general, I think as the blockchain technology evolves, and it's evolving very rapidly, and it's very exciting what's happening there, it'll become more and more useful for really solving these very large, hairy problems.
So how best for listeners to get back in touch with you?
Well, definitely anyone can email me at chris@clickventures.vc, clickventures.vc, and just Chris. And then, LinkedIn, people are more than welcome to reach out to me. I'm Christopher Fisher on LinkedIn, Click Ventures. Or, those are generally the two best ways. And I'll get back to you if you want to send me a presentation or a summary sheet or some kind of introduction to what you're doing and what kind of capital you're raising and for what round and some of the details. Then I can schedule maybe a Zoom call, or I travel around a lot too, so we could possibly meet up face to face.
Well, we'll put those in the show notes, and looking forward to having you back for a follow-up soon to see how the process is going with blockchain in particular.
avid fan of blockchain and looking forward to seeing some successful applications coming up in the near future and seeing how network effects can work with the tokens as well. But appreciate your taking time today.
Thank you very much for the opportunity to speak with you, and it's great to speak more. So great.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.